Hi there, just read this disclaimer please. Hi there guys, right, so it's the April monthly update. So as I discussed last time, I've had to I want to do it from the end of the month to the end of the month. So last time I did the 2nd to the 2nd, because that's when I decided to start doing it. So this time I'm going to do the 2nd to the 30, sorry, that's the wrong month. I'm going to do the 2nd of April to the 30th of April, and then from now on, and from then on, it'll be the last day of the month to the last day of the month. And when I say last day of the month, I mean after the markets have closed on that day. So in essence, it's the same price as before the first day of the month. Like 7 AM this morning is the same price as last night. Apart from, you know, I know some people trade after hours, but you get what I mean, I think. Here's the portfolio. It's something I forgot to show last time. It kind of shows how up or down I am, but it doesn't include any of the recent anything I've sold, you see, so it's kind of a meaningless stat sometimes. Like for instance, these momentum ones are showing quite well, but in reality the momentum ones I sold at the end of March were down quite a bit, so you know it doesn't truly reflect anything really than down 9.2%. So as you can see, here's a little look at how far I am off from my target portfolio. It kind of gives the amounts there. As you can see, there's two ones that I haven't even started making yet, the World Tracker and the Alternative Income one. Nowhere near even making it start. As you can see, I've labelled in blue are the things that aren't part of the target portfolio. So these are the things I need to start selling at some point. Okay, so portfolio changes I've made in the month. So it covers the tail end of the last tax year. So let's have a look what I did. Yeah, so really all I've done is go into O'Day Swan long short and Baillie Gifford global long-term global growth. I think I made a video about it. It was the last momentum fund change. And then the only other thing that I've done is with those two funds, with the polar, so this is the ad hoc momentum, and this is one of the algorithm momentum funds. I basically just sold it outside of the ISA and bought it inside of the ISA because we got into the new tax year, so I could add £4,000 into the LISA. Sorry, LISA, not ISA. So just basically on the same day did a sell and a buy. It was a bit weird because Hargreaves Lansdown wouldn't let me select the number of units on the purchase inside the ISA the first time I did it, because I was selling the whole holding outside of the ISA with the O'Day Swan here. That sell there. It's because they couldn't determine how much it was going to cost, but I was selling about 1,000. Let's have a look. I mean, it didn't really make sense because that's the amount I sold for, 1,537, and I actually had £4,000 in the LISA. So the only way it would have made, the only way we would have got in trouble is if the fund had over doubled, or maybe even tripled, over doubled in price overnight would have been the only way that would have got me in trouble. So when I rang Hargreaves Lansdown and explained that, they did it for me over the phone, no problem. So that was quite good. So I could keep the 27.6807 units without it being like a slight discrepancy, you know. It's just neat and tidy doing it like that. So yeah, it's just swapping where I own them, and then hopefully, I can't remember the time frame, in a month or two's time, I'll get the £1,000 bonus from the government, and I'll do a similar swap from outside to inside of the LISA, so that I can take that grand from the government and keep and spend it instead. Yes, that's it. No other changes really to the portfolio apart from just a bit of admin. Really, it's not even really a change. So the dividends paid during the month. So we had, well, on the 2nd I paid that much, but I think I included that in last month's update. And then on the 30th, so yesterday, I valued the portfolio and I also paid myself these dividends. So as you can see, the amount in the ISA that's not been paid out now, that has been paid out, is up to £2,000. So at some point I'll have to sell outside of the ISA and buy that amount worth, well, you know, I'll eat away at that at some point. And obviously some of it's just like a £1.22 of cash interest Hargreaves Lansdown, I paid myself 100 quid and 200 quid from iWeb. And for the iWeb ISA I paid myself 274, but that wasn't real. That's just like it's just like a tracking thing, that is. But I mean, the only time I'll get paid that money is when I eventually sell something outside of the ISA and I buy with this money that's inside the ISA as cash. And in terms of dividends that I actually got paid in the time period, well, as you can see, Barclays dividend got cancelled. I mentioned that last year. So GSK on the 9th, the FTSE 250 tracker paid that 200 odd quid on the 17th, 18 quid from JP Morgan Emerging Markets Income, something like that. I'll probably get the name wrong. And Lowland paid yesterday 335 quid. Just as a note, I've just noted down the pay date and the actual date here that I received it in iWeb. Or actually no, GSK was in Shell, I think. Sorry, in Hargreaves Lansdown. So as you can see, sometimes it's on the exact same day, but other times like this, it can happen take a lot longer. I mean, a lot of that I think was due to the Easter bank holiday being there, so there's 4 days in the middle there. But I mean, it wasn't just that, it was also late as well, you know. It was still 5 days late, but you know, that happens sometimes. You just have to grin and bear it. £660.94. Dividend announcements. So for City of London, they announced this dividend here to be paid on the 29th of May. So as you can see, this would normally be the time of year where they bump it up a little bit. But as you can see, obviously they're being cautious and just keeping it flat. I mean, to be honest, this like dividend records they keep about, you know, long 50 odd years of raising it. It's measured in the financial year, so this number is what matters. So actually, I wouldn't have minded if they'd just gone back to 4.55p here, and then 4.56p here, just so they could keep the record of increasing it, to keep the headline, you know, but kept as much cash as they could for the future kind of annihilation that the dividends are going to have. It would have been a token gesture increase, but it would have been an increase, and then in the next year they could have done a similar thing, just, you know, keep the increases lower so that they've got a better chance of keeping their record. I would have preferred, to be honest, but it might not have looked good in like a PR sense to have dropped it, even though the financial year's dividend wouldn't have decreased. It would have been a decrease from the last dividend, so probably wouldn't have been great for PR, I would imagine. And then also Merchants Trust has announced their latest dividend, and again they've just kept the value the same as it was in the 3 months before. And Murray International have also announced their dividend, same as usual, same as last year. Nothing much to say there really. And Henderson Far East Income, they announced their last one, again 5.7. I mean, it would have been 5.7 even if there wasn't trouble, because it's the next one where they normally increase it. But I would imagine the next one will be 5.7. And the final dividend announcement was from Henderson International. Same story, just 1.5p. They normally increase it in the fourth interim, so that would have been 1.5p anyway. So that's to be paid at the end of May. And the month-to-month performance look. As you can see in the unitisation, I've done the usual thing where I've just done the percentage change of the accumulation unit from the 2nd of April to the 30th of April. And as you can see, it was 12.22% up. Bit of a recovery from before. You can see that in the chart. It's just that little, well, I don't know, it's hard to see really, isn't it, when the 2nd came. The 2nd is somewhere around here, and the 30th is somewhere around there. Anyway, so I've just copied that number across. I've done all the same numbers. So the portfolio units have gone up by 12%. And I've used the AIC's website again to get all of these numbers. And it's actually done a little bit better than the Life Strategy 100 this time. And it makes sense that, you know, in a market that's going up, the life strategies that have higher bonds make sense that they wouldn't do as well as the other life strategy. And the Vanguard UK All Share got 8.42%, so it beat that as well. But you know, I'm not jumping around being happy about it, because actually if you do, I'm not actually sure if this is the best way to do this number. I'm sure there's an easier way of getting to that number, but as you can see, I'm 8% down overall, and I'm beating the oil share, but all of the other ones are still beating me over the 2 months. I hope that sums right. And I've done the same methodology. There wasn't any broker fees for iWeb this time for the costs. But what I've done is I've decided just to use the fee that was actually taken from Hargreaves Lansdown in the time frame, even though this fee actually refers to the month before, simply because I'd have to wait a few days before I made these videos. So I've decided just to use the same £1.47 as I did last month, and then going forward it'll be the number that's taken in the month that I'm reporting on. But yeah, I've just inputted the portfolio value at the beginning and the end of the month to get that number, to apply this number. You know, I've updated the weightings. I mean, if you go back to the last video where I went through the charges, you can see the methodology in more detail. But it's the same methodology. I've applied the average, weighted average of the fees including costs of each fund, applied it to the average of the beginning and the end month value of the portfolio, so that it estimates a yearly fee of that, and then one month of that is that, plus the broker fee of £1.49, and it gives a total of that and a percentage fee for the month of that. And the same methodology for the life strategy gives those numbers. So there we go. Yeah, I mean, it's no surprise that the life strategies are cheaper. £49.75 for the life strategy, £144 for my portfolio, estimated. And for each of them, as we can see, let's go from the bottom up. Royal Bank of Scotland not doing too great really compared to the average, and it had an awful month last year. Yeah, I've said it before, I'm an idiot. I know I'm an idiot for holding on to these. But then Barclays had a really good month. They released their results a couple of days ago, and they were up about 12% on the day. So they've had a really good rebound, but you know, probably still worse off overall. Shell's had a really bad month, obviously. They cut. Yes, that's what I forgot to say, wasn't it? Shell cut the dividend. How did I miss that? If we look here, my Shell dividend has heavily reduced. First time since the Second World War. So if I put, so it's 0.16 there. It used to be 0.47 quarterly. So, and this is the my estimate of the exchange rate from the US dollar. Obviously it changes every time. So I used to be getting £276 from them, roughly. I'm now getting 94, so my estimated income is now 10,300 quid. So yeah, that is worse than my worst case scenario video that I did. So that is, you know, we probably are going to stretch past the worst case scenario that I had a look at in that video previously. So I don't know, we'll see how things go. So obviously that's why that's done way bad. Down 13% when the average portfolio is up 12. Glaxo continues to do well, up 12. Well, actually up about the average of up below the average of the portfolio. But considering it did so well there, it's still quite nice to see. Global, well, you can see the numbers for yourself. Let's have a look for some outperformers. BlackRock smaller companies, yeah, as you can see, it was harder hit the prior month, so it kind of it's had a bit of a bounce back compared to the rest of the portfolio. Scottish Mortgage just keeps absolutely killing it. It's all tech things that like internet companies, where it's exactly what people need more of now because they're not going out and shopping in shops. Amazon, people getting more deliveries. Google, people using Hangouts to do their work and stuff. I don't know, all sorts of things. momentum. So that's the long short one, the O'Day Swan long short. It's kind of good that it's going down, really, because if that was going up, the chances are the rest of the portfolio would be going down. So it's, but it's, you know, not the end of the world that it's gone down that much, because as you can see, the Baillie Gifford long-term growth, which is pretty similar to Scottish Mortgage, same company managing it, is up by 20%, and so is the Polar Capital Biotech, up by about 20% as well. And yeah, you know, the rest you can see the numbers. Not much to say, really. And the only other thing to note, really, is that on the 7th of April, Fundsmith released their annual shareholders meeting on YouTube. So that was a great Tuesday night of watching that for an hour and a half. But you know, if you've invested with them, it's quite interesting to see what they've got to say. Yeah, that's about it, really. Not much else to say, I don't think. Okay, I'll see you next time. Bye-bye.